She was sitting at her kitchen table in Denver, Colorado, staring at a number she had been avoiding for months. $31,000, 4 credit cards, minimum payments she could barely keep up with, interest that never slept. She picked up the phone and dialed a number she had found on a government website, and waited. She had no idea that the next 18 minutes would change everything. In the next few minutes, I'm going to take you back to that phone call. What she said, what she heard, and the exact plan that helped Lisa, a 41-year-old administrative coordinator from Denver, pay off $31,000 in credit card debt without bankruptcy, without debt settlement, and without any of the shortcuts you see advertised online. Lisa didn't start out in debt. In 2019, she was making $54,000 a year, had one credit card she paid in full every month, and a small savings account she'd been slowly building for years. Then 2020 arrived. Her hours were cut. Then she was furloughed for 4 months. Then her mother got sick, and Lisa flew back home to Kansas twice in 3 months. Hotels, flights, medical copays, none of it planned, none of it budgeted. She put it on the card. Just until things stabilize, she told herself. Things stabilized. The balance didn't. By 2022, she had 4 credit cards and $31,000 in combined debt. Her minimum payments totaled around $800 a month. She was writing that check every single month and barely watching the balances move. That's the part nobody tells you about credit card debt. Minimum payments are engineered to keep you inside them as long as possible. According to the Consumer Financial Protection Bureau's 2023 Consumer Credit Card Market Report, credit card companies charge consumers more than $130 billion in interest and fees in 2022 alone, the highest amount ever recorded in the Bureau's data. At over 22% interest, Lisa's $31,000 wasn't sitting still. It was alive, growing every single month. She could build a payoff plan on a spreadsheet. She could run the numbers in her head. But every time she tried to execute, something interrupted. A car repair, a medical copay, a month where the grocery bill just went sideways. She was exhausted, and she was ashamed. Not because she had made reckless decisions, but because she had made 1,000 small ones that had quietly added up to this. In March 2022, Lisa was doing what she always did when she couldn't sleep, scrolling financial forums on her phone, when she saw someone mention calling a nonprofit credit counseling agency, not a debt settlement company, not a bankruptcy lawyer, a nonprofit. She wrote down a phone number. She didn't call it for 5 weeks. When she finally did, on a Thursday afternoon sitting at that same kitchen table, she expected to be judged. She expected a sales pitch. She expected someone to tell her she had failed. Instead, a counselor spent 18 minutes going through her income, her fixed expenses, and the interest rate on every single one of her 4 cards. No pressure, no upsell. And then he said something she had never heard before. Lisa, based on what you've shared, you qualify for a debt management plan. She had no idea what that meant. A debt management plan, or DMP, is a structured repayment program offered through certified nonprofit credit counseling agencies. It is not debt settlement, which involves paying less than you owe and carries significant credit damage. A DMP pays your creditors in full, but at substantially reduced interest rates negotiated directly with each creditor by the agency. The National Foundation for Credit Counseling maintains a nationwide network of accredited member agencies that administer DMPs. Laws and regulations governing credit counseling agencies vary by state. Always consult a licensed attorney in your state for guidance specific to your situation. Here's what a DMP actually does. The counseling agency contacts each of your creditors and negotiates a reduced interest rate on your behalf. Rates sitting at 22 or 24% can typically come down to 6 to 8%, sometimes lower. You make one single monthly payment to the agency. They distribute it to each creditor. Your accounts are closed. No new charges. But your credit score is not destroyed the way it would be in a settlement or bankruptcy. And you get something Lisa hadn't had in 2 years, a clear end date. The counselor told her that based on her balances, her income, and what she could realistically pay each month, she would be out of debt in 44 months. 44 months. She had been making $800 minimum payments for 2 years and watching her balances barely move. This plan had an end date written into it from day one. She said yes, here is exactly what Lisa did, and what you can do if you're facing something similar. Step 1. She verified she was working with a legitimate nonprofit agency. Not all debt help is equal, and the difference matters. For-profit debt settlement companies typically charge fees based on your enrolled debt, negotiate to pay less than you owe, and leave damage on your credit report that can last for years. Nonprofit credit counseling agencies operate under an entirely different model. The National Foundation for Credit Counseling, NFCC, is the largest nonprofit credit counseling organization in the United States. Member agencies must meet accreditation standards and are required to offer free or low-cost initial consultations. Monthly DMP fees are regulated and typically range from $25 to $50, a fraction of the interest accumulating on most balances. You can find a certified member agency at nfcc.org. Laws vary by state. Always consult a licensed attorney in your state for guidance specific to your situation. Lisa confirmed her agency was NFCC affiliated before she signed anything. That verification took less than 5 minutes. Step 2. She built her real budget, not her aspirational one. Before her first DMP payment, her counselor walked her through a bare-bones budget built from 3 months of actual bank statements. Not what she thought she spent, what she actually spent. Her take-home was approximately $3,600 per month. Fixed essentials, rent, utilities, car insurance, and groceries totaled around $2,350. That left $1,250. Her DMP payment was set at $780 per month. That left $470 for everything else: gas, medical copays, personal care. Any surprise that came up. It was tight. She knew it would be tight. But $780 a month with a guaranteed payoff date felt entirely different from $800 a month going nowhere. Step 3. She built a small emergency cushion before the plan began. Her counselor recommended she set aside $500 to $1,000 in a separate savings account before making her first DMP payment. Not to invest, not to grow, just to have a buffer that could absorb one unexpected expense without derailing the plan. Building a starter emergency fund before aggressively paying down debt is a principle widely recommended by certified financial counselors and echoed in CFPB guidance on debt management. The logic is straightforward. One unplanned bill, without a buffer, creates new debt, and new debt breaks the plan. Lisa put $600 from her tax refund into a basic savings account the same week she enrolled. She didn't touch it for 8 months. Step 4. She closed all 4 cards and switched to cash only. When she enrolled in the DMP, her creditors required all 4 accounts to be closed. She had a debit card and a checking account. That was it. She used a cash envelope system for variable spending: groceries, gas, personal care. When the envelope ran out, it ran out. No exceptions. No, just this once. She said later that the cash system taught her something she hadn't expected. She didn't have a debt problem. She had a spending habit that had become invisible. Step 5. She tracked her payoff date, not her balance. Every month, Lisa logged into her agency's client portal and checked one number. How many payments remained? 44, then 43, then 42. She told a friend that watching that number go down was the first time in 2 years that debt felt like something she was actually in control of. The month that almost broke the plan. 14 months in, her car needed a new alternator. The repair came to $680. She had $600 in her emergency fund. She was $80 short. She picked up an extra weekend shift at a local retail store. 2 weeks later, she'd covered the difference. The DMP payment went out on time. She didn't see it as a failure. She saw it as proof the system worked, that she had built something that could bend without breaking. Lisa made her final DMP payment in October 2025, 44 months after she first picked up the phone. She paid off $31,000 in full. Her credit score, which had dipped slightly when the accounts were closed, had recovered to 691 by the time she made that last payment, and continued climbing in the months that followed. When she started, she had $600 in savings. Today, she has $4,400, and she's still making monthly transfers into that same account because the habit didn't stop when the debt did. She has not opened a new credit card, and she didn't get here through a loophole or a trick. She got here because she made one phone call to a certified nonprofit counselor and then followed the plan for 44 months without quitting. What surprised her most wasn't the numbers, it was the call itself. She did exactly what the Consumer Financial Protection Bureau recommends as a first step for anyone overwhelmed by credit card debt: contacting a nonprofit credit counseling agency before considering debt settlement or bankruptcy, which carries significantly more long-term consequences. The hardest part, she said, was dialing, because picking up the phone meant admitting out loud that the number was real. If you've been sitting on a number you haven't said out loud yet, I want to ask you something. What stopped you from making that call? Leave your answer in the comments. Whether it's fear, shame, or just not knowing where to start, your answer might help someone else finally pick up the phone. If this video helped you see your situation differently, share it with someone who needs to hear it. And subscribe. You already took the first step just by watching until the end. Your next one is right there on the screen. Whether it's the video YouTube picked for you or the playlist with every story on this channel, keep going.